You just took out a big mortgage and you're wondering if making extra payments on that mortgage is worth it. Spoiler alert, it depends. What's up guys, it's TJ Gill. Welcome back to my channel and your source of Canadian Vancouver real estate. You just took out a big mortgage and you're wondering if making extra payments on that mortgage is worth it. Spoiler alert, it depends. Before you go throwing extra cash at your bank, let's break it down and see if it's worth it to you and how you could avoid screwing yourself over, because you potentially can. So, you got your mortgage, you got your keys, but you also got a big fat debt that you owe the bank. You're making monthly payments. A portion of those payments are going towards your principal, which is the amount you borrowed from the bank. But a portion of those payments are also going towards interest, which is your cost of borrowing. If you're making extra payments above and beyond your monthly payment, the goal is that money goes straight into your principal. What does that mean for you? Less debt means less interest. So who's the loser? The bank. They make less money off you. So let's be honest, that's pretty damn good. More importantly, less interest means you could pay off your mortgage faster. Instead of paying it off in 30 years, you might be able to pay it off in 20, maybe even 15. Just depends how fast you go. You do the math, that's years of not being chained to monthly payments on your home, and not to mention the tens of thousands of savings that you're gonna have over the years. All right, let's talk numbers. So you got a $500,000 mortgage with an interest rate of 4%. If you're throwing an extra $500 a month at it, you could save yourself $60,000 in interest costs. That's $60,000 is quite a bit of money. This is where it gets interesting. Most of the mortgages that people take out nowadays, they're front loaded with interest. So your monthly payment, it might be shaving a bit of your principal down, but most of your payments are going towards interest. So if you start making extra monthly payments, you're going to be shaving off quite a bit of interest. So how can you overpay? A couple of options. First one, you can make monthly overpayments. The second one, if you get an inheritance or maybe a bonus, you can make a lump sum payment. In either of those cases, what you want to make sure is that the payment that you're making is going directly towards your principal. So talk to your lender and make sure that's the case. But here's the kicker. Some of your lenders don't actually want you to pay off your mortgage early. So in the terms and contract, they have prepayment penalties because the lender makes money off your interest. If you pay off your mortgage early, they're going to make less money. So talk to your lender, make sure you know exactly what you're paying down and if there are any penalties. And sometimes there's a limit. Sometimes there's a limit to exactly how much you could pay off. So read the terms and conditions, talk to your lender. You don't want to be hit with these penalties. So should you make extra payments? Here's the truth. If you got higher interest somewhere else, if you got credit cards you own or lines of credits that you need to pay off with higher interest, do that first, because usually mortgage rates are a lot lower than credit lines, than credit cards. So I would do that first, but at the end of the day, if you pay your mortgage down faster, you'll thank yourself. I know some of you guys are going to do this anyways, but don't go overboard. You still want to keep some cash on hand because emergencies happen. You don't want to just chuck all your cash into your mortgage and have nothing left over. Because at the end of the day, if an emergency happens, your car breaks down, someone gets sick, then you need to borrow. Either you're going to have to refinance, which is a lengthy process, or you're going to most likely have to borrow at a higher interest. So don't go overboard, still keep some cash on hand. It's a good idea. Also, don't forget about opportunity costs. If you got a mortgage at a 2, 3, 4% interest rate, you might be better off investing somewhere else if you could get a 5, 6, 7% return. The S&P on average returns 8 to 10%. So if you invest just into the broad market, you might just be better off. I would say weigh out your options in this situation. Not everyone can return 8 to 10% annually. So at the end of the day, a lot of people are going to be better off paying off their mortgage. But at the same time, if you have the discipline and you're a good enough investor, investing might return you a better yield than actually paying off your mortgage. One thing that a lot of people don't think about is the psychology of things. When you're paying down a mortgage or you're forced to make monthly payments, you're forced to budget. You're forced into making saving and thinking long term. Without the pressure of a monthly mortgage payment, a lot of people can end up getting complacent. They stop thinking about their long-term wealth, they stop saving, they start splurging. So for a lot of people, having, as weird as it is, having those monthly mortgage payments, it's a good thing. just for the psychology aspect of it. I'm not saying that paying interest monthly is a good thing, but just for the psychology aspect. Something else to keep in mind, and something that a lot of people don't think about, is that inflation advantage. If you have a fixed rate mortgage, you're paying the same amount every single month. And because of how inflation works, over time, inflation erodes the value of that money. This is actually a unique place where you could use inflation in your favor. Essentially, you're paying down your mortgage, your monthly payments, with cheaper money, kind of a cheat code. This can make low interest debt very advantageous while you invest your money elsewhere and make a good return. A lot of people also don't think about is that when you're paying down your debt, it's paid down with after-tax dollars. If you were to invest your dollars instead, most of the time, unless it's in a tax-free savings account, you're going to be taxed on that as well. And the tax could be 30, 40, 50% on your returns. I want to keep that in mind as well. Something that cannot be understated. So now we're at the end of the video. A lot of people want to know, what's the answer? Should I pay off my mortgage early? Should I wait? It depends, but one of the things that is very, very underrated is the peace of mind of not owing the bank hundreds of thousands of dollars. It's your choice. Every situation's unique. Figure it out. At the end of the day, something that can't be understated is having the peace of mind and sleeping easy when you don't owe the bank hundreds of thousands of dollars. Every situation's unique, but in the case of overpayment, you could end up saving thousands of dollars in interest, especially if you're not the greatest investor. So, like, comment, subscribe. Until next time.